The Accunet Mortgage and Realty Show is sponsored by Accunet Mortgage, an equal housing lender, NMLS ID 255368, and Accunet Realty Advisors, which is a separate company from but still affiliated with Accunet Mortgage.
Putting a roof over your head without the headache. Get answers to all of your home buying questions. This is the Accunet Mortgage and Realty Show with Brian Wickert on 620 WTMJ.
Oh, we should really be doing this show out on a patio somewhere this morning. Welcome to the Accunet Mortgage and Realty Show. I'm Steve Ketelaar, along with Accunet Mortgages and Accunet Realty Advisors President and owner Brian Wickert, and right there, licensed millennial loan consultant David Wickert. As always, if you have a question, you can call us at 414-799-1620 or throughout the Midwest on the Accunet Mortgage toll-free talk line. That number's 1-800-877-1620. Let's hope next weekend, Memorial Day weekend, is this nice, huh?
Yeah, that would be great. I'll take it. Hey, we were talking right before the show. Does that mean that David is a licensed millennial? Or is he a licensed loan consultant?
I think he's both. Aren't you a licensed millennial?
I've got both cards in my wallet, absolutely.
That's great. All right, well, let's start talking today about that focus group that the Wisconsin REALTORS Association put together, talking with home buyers and home sellers and what they had to say about the real estate professionals that they worked with and kind of their motivations for buying and selling. All right, so, Steve, what's one motivation you can think of that somebody wants to buy a new house? Anything come to mind?
Move up. You want to move into a bigger house.
That's right. You want to move up. You're adding kids. You're starting a family.
Mm-hmm. Yeah.
Maybe you want to move to a nicer neighborhood.
Sure.
You're getting raised. You're moving up in the world. Better school district. That was frequently mentioned. Another answer was commute times. Hey, based on where you work, I want a shorter commute times. All right. What about first-time buyers, David? What are you hearing? And let's see if that matches.
Well, mostly it's millennials are tired of paying their landlord's mortgage for them.
That's correct. Mike in the focus group says, I decided to buy a house to get out of paying someone else to rent and also getting into the real estate market for investment purposes. And Amy said, our rent was going up 30%. And we're already paying probably more than what the apartment was worth, so it was a no-brainer. We went out and put an offer in on a house the next week.
Let me just push back real quick on the rent piece. And granted, we are in the home buying business, but at least in the Milwaukee market, you can choose to pay whatever rent you decide. If you want to pay $1,600 to live downtown, you can do that. If you want to, and if you want to pay $800 to live in Wauwatosa, you can choose to do that too. So, I get the pushback on rent, but it's not the burden.
Okay, it doesn't have to be the burden
Correct.
in the Milwaukee market. It's not like you're living in Chicago
Correct.
or Washington, D.C., where rents are just high everywhere. And I think the other thing that motivates some millennials is, hey, when we tell them that, $200 a month of your mortgage payment is actually going to build up equity in your home.
Sure.
They like that, too.
It's a forced savings plan.
Yep, it's a forced savings plan. All right. What about how did you search for and choose your real estate agent? Well, Nina said, I knew a mortgage guy. He gave me a couple of names, and I went with the one he thought was best, and 10 days later, I had a house.
Okay.
All right, that's a good experience.
Who do you know?
Yeah. All right, Gina, poor Gina. She did not have a good experience. We ended up going through my old coworker's husband. He was our listing agent, and it was a terrible experience. I think sometimes when you mix friends and family, it doesn't go well. Then she went on to say later that on the buying side, they met with multiple agents to represent them as their buyer's agent, right? So they used the friend, had a bad experience, like, we're not using you to help us buy the house. So they interviewed a couple agents, and then she says, quote, our niceness took over, and we decided to give the business to an agent who was just starting out. It was hands down the worst financial decision my husband and I have ever made. I can honestly say I don't think we'll ever use a realtor again. By the way, realtor is a trademark name of the National Association of Realtors. You have to be a member to call yourself a realtor. I am one, so I can say it. We were at the point that we were catching mistakes that the realtor made on documents. We'd tell him it wasn't correct. He'd say, oops. And every time he said oops, it seemed like it cost us $1,000. All right. I have an email. Here's Brian Wickert, personal experience. I got this email from a customer on May 15th, kind of in the same boat as Gina. Here are the hard lessons that I've learned. She had a house to sell, and then she bought a new house.
Okay.
Never, never, never trust a realtor. Sell your home by yourself and hire an attorney. That way, there is someone who is defending you or has your best interest. This was the most painful, difficult, and traumatic experience ever as far as selling and buying a home. And I have sold my homes twice in my lifetime, and I've never had this kind of unprofessional, untruthful, money-hungry people to deal with. I will never deal with realtors again. If I find the energy after all this and I get settled, I would like to report the behavior of people I've had to deal with. Don't even know where to start.
That's painting with a broad brush.
Well,
but
exactly.
Okay.
Because my reply to her was, there are a lot of really good, professional, highly ethical, skilled, and knowledgeable realtors out there.
Yes.
By the way, you could fill in that blank in her complaint and fill in attorneys or doctors or mortgage lenders, I suppose.
Yes.
So it is true that
you can have a bad experience.
Yeah, or you can have a great one. And what we're going to come back with here after we take our first break is my thoughts on how to find a good agent. Because so many people...
The questions to ask.
What are the criteria? Because so many people, I think, just kind of accidentally happen into their real estate agent.
Your old coworker's husband,
exactly.
Or something like that.
The nice lady from church who's been there forever. Another common one is, I met him at an open house. I didn't buy that house, but I really kind of liked her. We, hit it off, and so we started shopping for homes with that person. So when we come back, I got a few more things from that focus group from the Wisconsin REALTORS Association, and then we'll go into our tips for how to pick a good agent.
You're listening to the Accunet Mortgage and Realty Show on 620 WTMJ.
Expert advice on buying a home. Here's more of the Accunet Mortgage and Realty Show with Brian Wickert on 620 WTMJ.
Well, is Waukesha one step closer to getting the water they say they want, that they need so desperately? Well, Waukesha County Executive Paul Farrell gives the guys on Wisconsin's Afternoon News an update at 3:21 tomorrow. We're right now in the midst of the Accunet Mortgage and Realty Show here on 620 WTMJ. Brian Wickert with us, David Wickert with us, talking about finding or picking a really good agent.
Well, just 2 weeks ago, I had a mortgage client call me to get pre-approved to buy a new construction property in a small town in Chicago. They currently live in Ozaukee County. And so I said, sure, let's go through that process. They're moving to get closer to their children and grandchildren, so they're retired. And I asked, well, do you need any help selecting a listing agent up there in Ozaukee County? I was like, well, you know what? Actually, we could, because they had gotten a door hanger on their door. That's kind of like guerrilla marketing.
Sure.
It's saying, hey, do you need a free market analysis on your house?
Yeah, right after the knife guy came by.
Okay, so that's a long tested, and so they had this agent come by and give them a market analysis, and guess what? She was a new agent, like brand spanking new, okay? But they liked her and this sort of thing. Well, then they had somebody from church that, they knew was a realtor, and then a third person that somebody had recommended. All right, so I said, well, tell you what, here's what I'm going to do. I am going to go on to the MLS. So this is the service that I provide, Steve, through Accunet Realty Advisors.
Sure.
We're a licensed real estate brokerage company, but I don't actually go out and show anybody homes.
Sure.
But I can help you find an agent to work with. All right, so I go on the multiple listing service, and I ran a report. Show me, Mr. MLS computer, all the sales in this submarket in Ozaukee County in this price range. I used $250,000 to $350,000 because they thought they'd be in the low 300s, fine, for the last 24 months, and make me a list of all the agents. Okay. The agents on their short list, the new one had 0 transactions.
Sure.
And the other two each had 1 each.
In the last 2 years.
Okay.
Whoa.
Okay. So there were 2 agents on the top of the list that had 6 each.
Okay.
I did not know them personally, but I decided, I'm going to check out their references, so to speak. So I called another agent who I know very well, works for the same company, and said, who would you recommend in this, Ozaukee County submarket? He named the top person on the list.
Sure.
Slam dunk. So I connect these folks, and guess what? The agent is from the small town in Illinois where they're moving.
Oh, man.
Of course.
Kismet.
That's serendipity right there.
Yeah, that was good karma all over the place. So Very happy. These folks also are one of the few who took my advice, and they had a pre-listing home inspection done.
Oh, okay.
Because they'd lived there for 10 or 15 years. I got to find out if they found anything that they need to fix, but better to do that. Now, a lot of people think, well, gee, Brian, how much do you charge for that awesome matchmaking service?
Yes.
Is that what's running through your mind?
Of course.
Yeah, that's what I'm wondering.
Yeah, well, guess what? It doesn't cost the consumer anything, because in the real estate world, it's perfectly legal for an agent, the listing agent, to give a referral fee to somebody who finds them a customer. That's patently illegal in mortgage lending.
Sure.
But the realtors have a much better lobby, apparently.
Yes.
And so the customer doesn't pay one nickel more. The person who's listing their house doesn't pay a nickel more, but I get a referral fee from the listing agent, upon the successful
for the
sale.
matchmaking.
Yep. For no extra cost to the consumer. So that's pretty darn.
And you get to find the person who's done 6 sales in the past 2 years, not just the nice lady from church who's done 1 in the past 2 years.
That's the idea, and that's going to play into our criteria. I'll give it away. That's my number one criteria is, hey, if I'm going for heart surgery, I want the guy that's done 1,000 of these.
Yes, not the guy who graduated yesterday from the Medical College of Wisconsin.
And that's not to say that guy might not be a great surgeon, but let's go for the people who are experienced. And I swear, people never ask that question of real estate agents.
Sure.
So when we come back, we'll give you the rest of our list.
You're listening to the Accunet Mortgage and Realty Show on 620 WTMJ.
Helping you find a place to call home. This is the Accunet Mortgage and Realty Show with Brian Wickert on 620 WTMJ.
Well, the Brewers wrap up a 3-game series in New York against the Mets this afternoon. Let's hope for a win. The Brewers game day coverage starts at 11:35, sponsored by Metro Milwaukee Honda Dealers. It's the Accunet Mortgage and Realty Show here on 620 WTMJ. Brian Wickert with us, David Wickert with us. We're talking about finding a good real estate agent.
So in the theme, imagine you were going to negotiate a contract with the Brewers. What criteria would you use to, pick the person who is going to help put together that legal document? And we'll just frame it in terms of a home. The same theme.
My brother-in-law's bowling buddy just got into
writing contracts for baseball players.
Yeah, I think I'm going to use him.
Absolutely.
All right, so our number one criteria is actually ask them and can you show me a list of the transactions that you've handled in, my market segment? And
sure.
I define my market segment, let's say you're in Brookfield. You're in the city of Brookfield. I think that's a big enough market that you would just say, show me what you've done in Brookfield. Okay, I think I want to, buy a house in the $400,000 price range. How many have you done from $350,000 to $450,000?
Yes.
And then, now if you're up in maybe Cedarburg, maybe that's a Cedarburg-Grafton combination. You kind of got to know what's the sub-market. But then you also got to put a collar on the price range, because I got to tell you, there's a big difference between selling $400,000 homes and selling $1 million homes.
Yes.
It's a different market. Okay, so you'd ask them to show you that list. Okay, great. You've done more than 2. Mm-hmm. I'm thinking you want, half a dozen, 5, 4.
More than 1 at bat.
Mm-hmm. And then how's about this question? Well, tell me about a difficult transaction that you recently had and how you handled it.
Okay.
Because that's where really good real estate agents that I recommend to people, that's what they're really good at. They are the calming force. They are the voice of reason. They are the skilled negotiators that keep a deal together and, try to bring a deal to a fair conclusion.
Mm-hmm.
And some of the things the most typical thing that goes sideways is, property inspection. There are things wrong with the property.
We found something wrong with the septic. How did you handle doing that?
Now, so we're still on the first criteria, get somebody with good experience. But now here's the hard part. I don't know how the common person is going to be able to assess this. But the really good agents are good at crafting language for the contract.
Mm-hmm.
So, for example, when you come across a problem with a property and you're going to make them fix it before closing, a good skilled practitioner will say who's going to do it, by when it'll be done, and exactly how is the fix. So it's got the remedy, the specific remedy, who's going to perform it, who's going to pay for it, of course, and by what date is it going to get done.
Mm-hmm.
The sloppy one just says, fix the roof.
Yep.
15 minutes before closing.
Yes.
That's bad. You want the detail in there. So you need somebody who is good at drafting contracts.
Who's not afraid of being specific.
I think that's where only a service like ours really knows that.
Mm-hmm.
I know who's good and who's sloppy.
We've seen their contracts.
We're going to give you an example, by the way, after the news of this week's worst contract amendment, because they keep happening. If you're going to hire someone to sell your home, so now we're on to criteria number 2. If you're going to hire somebody to sell your home, ask them, what, if anything, are you going to do beyond getting me on the information superhighway called the NMLS to market or prepare my home to be marketed? So some of the things that you might need or you might want to look out for, staging.
Sure.
That's just the redecorating your house, decluttering it, getting it in the best shape it can be to make the best first impression once it does go online. I'm a big fan of professional photos. Don't cost a lot of money, $200, $250,
sure.
And it's unbelievable the snap that those have. What about a broker open? If you're in that higher price range, in that $450 and up that we talked about last week or the week before, where it's a lot of supply and not a lot of demand, a broker open is where the real estate listing agent puts out some sandwiches and some sodas and invites all the agents in the area. Come on through and see this cool new listing that I have. Kind of whip up a little top-of-mind awareness.
Yes.
From the other professional salespeople in the area. Will you be on Zillow and Trulia? That's a debate. Shore West, I'd say majority of their listings don't go on Zillow because their feeling is that they don't want that Zillow's estimate of the value to be right out there, next to the purchase price, because there can be dissonance in that.
Yes.
But a lot of people go to Zillow to shop for homes.
Sure.
And so, is that a good thing or a bad thing? I think that, and Shore West gives the seller the option. Do you want to be on Zillow or not? And,
okay.
Anyway. And then what about pre-listing marketing? Right now in this hot market, I know some really top agents who are sending out kind of, hey, before this goes on the market, I'm going to send out an email to my past customer list to say, do you know anybody who wants this house in Brookfield?
I'm soon to put on the market.
Right, yeah, sure.
Yeah, yep. A little kind of pre-market buzz. So those are some of the little extra things that you might get. And then from a buyer's agent's perspective, it's the same thing. What exact experience do you have in
purchasing in that specific market?
Yeah, in that sub-market. So there you go. We can help you do that. Accunet Realty Advisors. You can find us online at AccunetRealty.com. All right, it's time for the news. When we come back, we're going to talk about credit card debt and how that impacts your ability to buy or refinance a home.
You're listening to the Accunet Mortgage and Realty Show here on 620 WTMJ. We head now over to the WTMJ 24-hour newsroom with an update. Here's Colleen Bolin.
Thank you.
Getting you through the home buying process. Welcome back to the Accunet Mortgage and Realty Show with Brian Wickert on 620 WTMJ.
So we're at the point of the program now here on the Accunet Mortgage and Realty Show where we're focusing in on credit card debt and how that affects your ability to qualify for a mortgage or even refinance.
Correct. So there was an article in the Wall Street Journal earlier this week that made reference to a report from the Federal Reserve pointing out that credit card debt is on its way, on the fast track to being $1 trillion in outstanding balances. And I think what we try to focus on in the mortgage world is the liability side of someone's balance sheet. Whereas your financial advisor might focus on the asset side, we in the mortgage world, we get to focus on the liability side. So what that means, and the way that I frame it in conversation with borrowers, is we have to do an affordability calculation in the mortgage world, and that includes credit card debt, whatever that monthly payment minimum is. So that's $1 trillion out there in the economy. Don't worry, though. It's not as much as student loans, which is $1.3 trillion, according to the CFPB, the Consumer Finance Protection Bureau. Also in the mix there's $1 trillion worth of car loans out there as well. But the El Jefe of debt is still mortgages, clocking in at $9.9 trillion of mortgage debt outstanding in the world. So I think what we wanted to point out was, what exactly is $1 trillion? $1 trillion here, $1 trillion there. Yeah. What does that really add up to?
All right, just to put that in perspective, Steve, if you bought, I looked up online today, the average new car price, according to the internet, is $34,000. So that's got to include trucks.
Okay.
If you bought a new car every day, How many years in a row could you buy a new car with $1 trillion? Do you think it's 20,000 years, 60,000 years, or 80,000 years?
60,000 years.
All right, good guess. There's no way you'd know that without a quick calculator. The answer is 80,580
Wow.
years.
New car every day.
Every day, back to the time before humans walked the earth.
Yes.
Okay,
Which is
sure.
approximately 80,000, 75,000 years ago. Okay, so the way that comes into the mortgage lending practice is that we have to count people's minimum credit card balances against them. Mm-hmm. Another article that I found online on this topic from Money Magazine, and I got to give this guy credit. I'll give him credit before the show's over. The average amount of credit card debt that people are carrying from month to month was surprisingly small, I thought, at $4,700. At an average? The average.
Right.
Yeah.
The average is like, okay, well, if a lot of people have zero and, only some people have $40,000. Yeah. Okay, average versus median. That's all.
Good point. But, still, I thought it was going to be higher than that.
Okay.
But here's the other shocking thing. Here we'll go back to Steve, who doesn't know the answer because he hasn't seen this part of our homework. Do you think let's ask it this way. Do you think a third, a half, or 2/3 of people pay off their balance every month, Steve?
A third.
You are correct. 35% of people are what the industry calls convenience users, meaning they're just using the credit card for convenience, not to extend their lifestyle beyond their means.
Sure.
According to creditcards.com, and I take dispute with this, they say that the average payment on a $4,700 balance would be $189. That's 4% of the outstanding balance. We see a lot of credit cards on the credit reports we get where they only have to pay 1%.
Wow.
David's got a case going on right now where the person has an $18,000 balance.
Whoa.
And it only has a $189 monthly payment. Mm-hmm. But in order to qualify them for their refinance, we are going to pay off. We're going to take cash out of their home, which I don't generally recommend. And we're going to talk about that when we come back from this next break. When is it okay and when is it not okay to take equity out of your house to pay off your credit card debt or even a car loan? We'll cover that when we come back.
Right here on the Accunet Mortgage and Realty Show on 620 WTMJ.
Important home buying questions and answers you can count on. This is the Accunet Mortgage and Realty Show with Brian Wickert on 620 WTMJ.
You ask, he answers. WTMJ's consumer expert, Clark Howard, is on Wisconsin. And he's covering it right here with listener questions and giving advice on everything from travel deals to what cell phone you should buy. Don't miss WTMJ's Clark Howard Showcase Show tomorrow afternoon, beginning at 2:07 right here, sponsored by Glacier Hills Credit Union. Brian Wickert is with us, David Wickert with us, as we continue to focus in on credit card debt and whether or not you should ever try to pay that off as part of a refi, kind of bundle it all together.
Yeah. And our answer to that is only if it's absolutely necessary.
Because you really only get one trip to that well.
Well, depending on how much equity you have in your house, you can do it time and again. I had a customer in Chicago years back who would be back every year, refinancing another $25,000 of credit card debt. Which, by the way, according to this article, let me just see if I can find this here. If you, this is the Boston Federal Reserve, increasing your credit card limit, okay? So if you're the kind of person who carries a balance every month, you're called a revolver, right? Because you keep it out there, as opposed to a convenience user, you're a revolver. So if a revolver gets a 10% increase in their credit limit,
so from $20,000 to $22,000.
They will use 1.3% of that extra 10% within 3 months. And they will use 9.99% increase in the debt over the long term. So all of it.
If you ask for it, you're going to use it.
Correct.
If you're a revolver.
And guess what the number one reason is for the growing mound of credit card debt out there in America?
Solicitation.
That's right.
Okay.
Because how many...
Hey, you want money? I got money for you. Great money.
How many credit card offers do you get in a week, Dave?
Oh, a dozen.
No.
I don't know. It just feels like it.
Okay.
Well, via email, mail, and ads just walking around online. I'm sure that's not a crazy amount.
The drug dealer called, the credit card companies are pushing their drug out there on people, and people are saying yes because it allows them to live a lifestyle beyond their means. Now, David, before getting into the mortgage biz, was a financial advisor. And what do you always tell people?
Other than to just pay it off?
Yeah.
That's it. That's the only rule there is.
And not to accumulate the debt.
Oh, correct.
To spend less than you make.
Sure, exactly.
It's a phenomenal principle to spend less than you make.
But that's what the credit card thing does. So when it comes to mortgage lending, our advice is, and in this particular person's case that I mentioned before the break, $18,000 of credit card debt, let's say it's sitting out there at 15%, it would literally take this person 30 years, I did the math,
to pay it all back,
using the minimum payment of $181 a month. Well, you might as well put that on your mortgage because at least you're going to reduce the amount of interest you pay by a ton because it's only going to be 4% or something instead of 15%.
Mm-hmm.
But the core thing that you brought up, David, was are you going to change the behavior?
Right.
That led to accumulating that 18. Was that an emergency? Did somebody have a medical problem? And so, we're doing it. And here's the other thing. Not too long ago, you could not pay down credit card debt to qualify.
Yeah.
Meaning, hey, I got $300 of credit card. If I pay that off in my refinance, don't count that $300.
Well, not just pay it off. Pay off and close.
That's
you
right.
have to do the extra step. We not only want you to not have that, we don't want you to be able to keep doing the behavior that led you here.
Correct. So the mortgage world, maybe to the detriment of the consumer, has gotten more liberal. Mm-hmm. It used to be, no, we're sorry, you cannot pay off credit card debt to qualify.
Yep.
Then it went to, you can pay it off, but you have to close the offending account.
Sure.
And now we're back to the point where, along with our other list of crazy things we can do in mortgage lending from last week, you can pay it off and keep it open, and we won't hold that old.
You just got to raise your hand and promise that you're not going to keep using it after
that's done.
Yeah.
So you can pay it off, and you can pay off you've always been able to pay off a car loan. I also don't recommend that, generally speaking. Why? Because why would you want to pay a car loan off over 30 years?
Yeah.
Or even 15 years? Yeah. That thing's going to be in the scrap heap. Again, in this case that David has going, we are doing that. Why? It's the only way that they can qualify. And their mortgage of $120,000, I think, is at 5.75%. So this is, people can do whatever they want, and we will facilitate it.
Yeah, you can clean it up, but you might not have changed the ultimate outcome if you're not going to change the behavior that got you there.
We're hoping. All right. When we come back, I got a few more tidbits from that Realtor focus study that we can talk about on people shopping for homes.
You're listening to the Accunet Mortgage and Realty Show on 620 WTMJ.
Home buying advice from the guys who know it best. This is the Accunet Mortgage and Realty Show with Brian Wickert on 620 WTMJ.
And we love taking your questions, and that's why we bring in Jim from Greenfield. You're on with Brian and David Wickert.
Yeah, good morning. Thank you, guys.
You're welcome. How can we help you today?
I've learned a lot from listening to your show over the last few years.
Thank you.
So here's my quick question. Why I don't understand on a purchase contract, an offer to purchase, the number one line, I think, on all contracts, where the licensee drafting this offer crosses off he's the agent for the buyer or the agent for the seller. Now, why would the person representing the party buying the property, why would they cross off agent of the buyer and list themselves as the agent for the seller?
That's a really good question, and I think the answer is because they don't want to hold themselves to the standard of being the buyer's agent. And let me explain. And I had somebody just the other day, Jim, this is a great question, incorrectly, in my opinion, explain this was the agent explaining to the buyer, it's the same. It's the same whether I'm an agent for a buyer or a sub-agent of the seller.
Not really.
No, it's totally different. Because when you are an agent of the buyer, your fiduciary responsibility is to put the buyer's interests ahead of your own, and definitely ahead of the seller's.
Sure.
When you are a buyer's agent, you have to do whatever you can to get the property under the best terms
Sure.
and the best price for the buyer.
Right.
So I am flabbergasted anytime I see that.
Well, some people still do it, correct?
Yes. It's more rare, but I think it should be a screaming red flag to that buyer to say, hey, wait a minute.
You don't represent me?
Yeah, you don't represent me?
Yeah.
And then I've had agents say, well, you didn't want to sign a buyer's agency agreement, blah, blah, blah. That doesn't matter. Yeah, it would be great if you had a buyer's agency agreement, which is a 3-page form put up by the state of Wisconsin that really spells it all out. But you don't need that to, all you have to do is behave like one and mark on the contract that you are one. So that is a great point, Jim. Thank you so much for your call in. If you are a buyer, and you are sitting down there to write the contract, and you see as that first line, what Jim just pointed out, that the person writing the offer is an agent of the seller, stop the
Raise your hand.
Raise your hand and say, why? I want you to be my buyer's agent. Okay? That's a really good point. Okay. Speaking of that, on that same transaction that I was just talking about, where it's the same.
Yeah.
Agent for the seller is
Totally the same thing.
The same thing, except for it's completely different. On that same transaction, here was a amendment that we received this past week, I believe, on the 17th. And this was an amendment drafted on the 11th that we were not made aware of until the 17th. And it says, buyer to hold seller harmless from any issues arising from roof repairs at the time of the repair or after repairs have been completed. Roofer to be insured. Like, okay, once you tell us on an amendment, this is, I can't say this enough times. If you want the lender to make you fix something before closing, go ahead and put it on an amendment.
Sure.
And this had to be about the roof. If you put it on the amendment, I'm going to see the amendment. Why? Because you have to give me a copy of the amendment. And please give it to us timely, not a week after it happened.
Yes.
Okay. And then if you say something and they're like, yeah, you're going to get the original draft of this, I happen to pull up the wrong one, was we're going to give you a $950 credit because of the crummy roof that you're going to get fixed after closing.
Got it.
Ain't going to happen. Once
roof's got to get fixed before we put the big amount of money on that home.
That's right. Even though it was a relatively small dollar amount, $950, and she's putting like $100,000 down, it doesn't matter.
Yep.
If you've got a problem with something, a roof, a furnace, basement wall.
Well, and that cuts both ways. I had a conversation with a buyer this week who wants to force the seller to fix the septic.
Yep.
And so it's like, if you put it in there, I as a lender am going to say, well, it's in there and we got to get it fixed before that collateral is, made whole.
Right.
And that works perfectly fine. But if you try to sneak it in there with that amendment at the last minute and, I'll just give you a couple bucks on the side.
Not going to happen. No. So the rule, Steve, is that if it affects the marketability, future marketability of the property, lenders are going to make you get it fixed before closing. Then the next thing that always comes up is they say, well, can't you just do an escrow holdback? Like close, and then we'll put some money aside in an escrow account. And the answer, 99 times out of 100, unless we are going with a portfolio loan that does not have to meet Fannie Mae and Freddie Mac requirements, no, it's got to be done. Unless it's weather-related. If you had a roof issue in January and there was a foot of snow, okay, we can set it aside then, but that's the only example.
That's even true on some construction refinances as well. You can't, hold back the money to put in the driveway.
Right. If it's in the contract. Let's do a segment on that next week. All right, bottom line, what's happening with rates real quick, Dave, in a little bit of time?
Sure. So as a modification of all the right stuff, I want to do an example on a $300,000 balance with a $400,000 value. Rates did creep away from us a little bit this week, but still able to offer 3.625% on a 30-year fixed with an APR of 3.63. That's with a regular loan cost of $1,100, appraisal, title insurance, credit report, and the cost of the closing agent. If you wanted the no-cost option, which is always if someone wants to buy you dinner, don't turn them down. So at 3.75, that's with zero closing costs on a 30-year fixed with an APR of 3.76. So
right.
money's still cheap compared to credit cards, for sure.
For sure. But what's happening is that the Federal Reserve is now expected to raise rates. I think it's over 50% chance of raising rates on June 15th. So that is what is driving
Next on our calendar.
Next on our calendar, June 15th. All right, that's all we have time for today. Rates are still great. If you want to check out a refi or get started on a rock-solid pre-approval to buy, you know where to go. ACCUNET.com, and just click on that blue button. Thanks, Steve.
You got it. We'll catch you next Sunday morning starting at 10. This has been the Accunet Mortgage and Realty Show on 620 WTMJ. Colleen Bolin joins us next from the WTMJ 24-hour newsroom.
The preceding was a paid program. Advice and opinions expressed during the Accunet Mortgage and Realty Show are solely that of the hosts or guests of Accunet Mortgage and Accunet Realty Advisors, and not WTMJ Radio or Scripps Media Incorporated.